All right, all right, all right. Here we go again. And all right, my mic is right, so the birds don't dominate the show because they are kind of noisy out there. So, what are we looking at? All right, so we had the Fed yesterday, and nothing new, no surprises. Market seems pretty good about it. I think today's the day. Usually, the day after those market announcements, we get to see how the market really feels, or after those minutes, the day after the Fed speaks, the markets show us how they feel. So I'm looking at this daily, like we talked about, trend reversal pattern right here. Here's a divergence. Here is a higher low, perhaps. It looks like it's making a higher low. So what we need to see is really a break above the higher high. The aggressive entry would have been the break above the previous, not yesterday, but the prior day. So Wednesday, Tuesday, the break of Tuesday would have been an aggressive entry. I wouldn't take that entry just based on the trend of the market. Um, and we could based on what we're looking at, put a trend line like that. And it's very aggressive, but it looks like it respected it twice. So that kind of tells me that's a good trend line. You could watch for that break. Um, so I mean, you can make this very aggressive pennant and play this right here. Watch your risk. You know, a break to the downside, obviously, play it down either way. But you could leave those lines in there and kind of monitor today's trade like that. You have Nonfarm tomorrow, so the market might be whippy, so be careful. Again, I like this trend reversal because we have this significant support right there. And as I explained in other, it's this blue line. I know it's hard to see. There's a lot of shit on my screen. But this blue line is kind of the trend we were on prior, and this goes back, you know, like I think I've got this back like 20 years. Did it just disappear? Yeah, it just disappeared. Wow, that's fucked up. So anyway, that trend goes way back, and that's basically this trend. And then here is the lockdowns, and then this ridiculous launch in the market after the lockdowns. And so this is the high of this consistent trend. This is the low of this consistent trend. And this right here was pretty much around where it would gravitate. So these were the outliers. And that line that I just canceled out is where they would all gravitate. I can't believe I did that. So that's what's making this trend reversal very significant to me. And I'm watching this very closely. I'm being conservative and I'm waiting for a break, but I kind of feel that this is the area that we should trend around. I do have those lower targets to close up some deep-seated gaps at 33.18, and you know, Burry is kind of the opinion that the market should head back there also, and I kind of respect what the guy has to say. I mean, he doesn't speak much, but when he does, he's usually pretty fucking accurate. Um, so so I'm keeping my eye open, but you know, he's also a man, and yet you know, he's not going to be 100%. He's just very very accurate. So this could be that 20% that he's off. And yet, you know, he called the short a long time ago. So even if he makes that mistake by 20%, he's made a lot of money on this correction. So it's good information. Um, so that's what I'm watching, man. That's what I'm watching. I'm keeping an eye on this. I'm watching what's happening, and I'll play it accordingly. If we look at the 10-year, oh look, we popped up a little bit. That's nice, but you know we've been moving down so much. It's you know obvious that we're going to have a little bit of a pop. I don't know what bonds are doing today, and it's only 6:50, so I won't know until about 8 o'clock. But could be building a head and pattern, a head and shoulders pattern. Might come back up. Momentum's down. Everything's down. I still think that 24, 26 is a good number. I think the bonds are going to continue to pull back. The VIX is calming down a little bit. I think we could find some trend lines in here. Let's see what this one looks like. Yeah, that's the bitch right there. Look at that. If it breaks this 20, then we can get into a more conservative, consistent environment. Take some of that volatility out. Start setting up those income trade portfolios again. That's what I'm looking for. I mean, the trading's sweet, don't get me wrong. Lots of volatility, lots of movement, keeps me very busy during the day. But, you know, those income trades, I like the consistency in growing the portfolios and the lack of risk. Let's take a quick look at... Oh, we have some oil stuff right here. Oil. Oil's up right now. It's up 50 cents, but it looks like it's in a daily bear flag. So I wouldn't be surprised if oil has another leg down. Didn't really do a lot of homework on it, but now that doesn't really tell us much. That ETF. I'm looking at oil on another screen, and actually, let me just talk a minute about it. I'll take a quick look and see if I can get a projection on it. Can't show it to you because it's on another screen, and I bet we come down to about $84 a barrel. We stabilize right around there. We're at a major support right now. The daily is in a bear flag. It looks like today is the setup of the bear flag. So today's low right now is $93 a barrel. It's trading at 95. So I'm expecting it to close there with today's low of 93, and then maybe tomorrow make that trigger if that bear flag triggers. It's not a bear flag yet. It looks like it's setting up a bear flag. It's not too aggressive today. It should set up a nice bear flag. And then I think ultimately we'll probably settle around 84, 88, $84 a barrel. We just need gas to go down. I'm not clocking gas, but it's probably trading consistent with that. A little slower in coming down because the refineries are being manipulated. And if we let's look at Coinbase, because I think we're here. I think we're here, and we're in a position to start looking to go long on Coinbase. So you know what? I'm going to watch this consolidation. I'm not going to go. I'm not going to be bullish yet, but I'm watching that for support. I'm watching the end of that cluster. And you know what? I'd even move it down. Let's call 4083 the support. The momentum is trending up. Could just be working its way back to the zero line, but we'll watch it. We'll see what it builds. There's nothing in it. I'm not looking at anything. I don't see any setups that are exciting. I'm just kind of looking for it to find its bottom. I mean, you could put a trend line here, but it's played out too long. So, you know, across the tops, but it's played out too long. It doesn't look like it's going to make a good spike. The come down was pretty aggressive. It's going to take a little while for this thing to cultivate. but good time to keep our eye on it. And let's look at Bitcoin. Bitcoin. Think. All right, so we have a divergence, a bullish divergence. Looks like we might be developing a head and shoulders, long drawn out head and shoulders. And yeah, this sucker took a nice beating also. So it's going to take a little while for it to roll around. And who knows what geopolitical bullshit is out there. But let's watch for this head and shoulders. I'd like to see it push up a little bit more to the 21,300 range. And then put in that small shoulder, have that the neckline, the 21,300 around the neckline, and then we could look for maybe a close of this gap right here. Might just run up and hit a little resistance right around that gap. That's interesting because it puts it at close to the breakout of the Fibonacci cloud. And a breakout of that cloud would be nice. So that's what I'm going to keep my eye on Bitcoin. I think I'm going to stop being so negative on the market. We'll see how things translate or lay out. I'm just seeing signs of inflation easing right now, and maybe we get another 75-point hit out of the Fed, and that would be good. That would put us close, and I think they're gonna start slowing down. So, I'm watching sales at stores. I'm watching price reductions. I'm watching prices come down on automobiles. Europe's going to take a beating right now. The euro's tanking, so they're not going to be consuming a lot of shit. So, I mean, this is what we want. And in my experience, I've seen that. I've seen Europe. I've seen Asia go into mild recessions and just skirt tail us through the rough times, and maybe we go into a little recession, which is no big deal, or maybe we don't recede at all, but and then Europe and Asia turn around and start consuming and just elevate our economy, and I've seen that happen time and time again in my career, and it looks like that's going to be the layout. I also think the tides are going to turn right here in the Ukraine-Russian war, and I think that will bode well. I think the rest of the world is going to find accommodations to work without Russia. All we have to do is put the thumb screws to China and roll that. So I don't know, man. Am I an eternal optimist? Could be, but I think I see the signs. So I'm easing off on my bearish sentiment, but I'm watching for the change in the market direction. So anyway, I could go on all day. That being said, subscribe, hit the bell, hit the like, send me your comments, whatever you do. I appreciate the support. Everybody watch your downside and good luck trading.